It's the biggest deal in our electricity industry since the mixed ownership model began. Contact Energy wants to buy all of Manawa. How much of a powerhouse will the companies be? What would you say to competitors, Mike? The likes of Meridian, the likes of Genesis, Mercury looking at this, should they be a bit scared about how big you're going to be now?
I wouldn't use the term scared. We're always up for competition. We enjoy competition.
All eyes are on the electricity industry as dry hydro lakes and a gas shortage sent wholesale prices to new highs. Industrial users without fixed contracts are hurting the most, but all of it keeps upwards pressure on retail prices. Our electricity industry is led by 4 major generation retailers, aka gentailers. Meridian is the biggest, producing about 18% of the country's electricity. It owns the Manapōuri and Waitaki dams, as well as wind farms nationwide. Mercury is also big on hydro, with its main assets along the Waikato River. Genesis is the system's backup with its Huntly power station. And Contact Energy is big on geothermal. Contact is the only gentailer not majority owned by the government. There used to be a 5th player, Trustpower, but it sold its retail business to Mercury in a $440 million deal. Now it's called Manawa and does generation only, with 25 hydroelectricity assets producing 9% of our total hydro capacity. It's majority owned by infrastructure investor Infratil. It's held onto the asset since it listed in 1994. But now they're about to sell it. Contact wants to acquire all of Manawa in a deal worth $2.3 billion in a mix of cash, shares and debt. Contact CEO Mike Fuge and Chairman Rob McDonald have been in talks about this all year. They told me the merger is all about hydroelectricity. Contact owns the Clyde Dam on Lake Dunstan down south, but aside from that, it's failed to make a significant mark in hydro generation. It's why it's so attracted to acquiring Manawa's assets. On the day the deal went public this week, Mike and Rob took some time to talk about the power this historic deal may hold. Mike, Rob, thank you so much for doing this together. Appreciate it.
Thanks.
Let's talk about size of the deal first. This is one of the biggest deals I've seen in years. I mean, Rob, how historic is this?
Yeah, I think you have to go all the way back to the original MOM program of sale. That's some time ago, more than 10 years. So the deal itself is, when you put the scrip and the cash together, that's $1.9 billion. When you think about the enterprise value, that comes to $2.3 billion. So yeah, quite a sizable deal.
Quite a sizable deal, fair to say. Who started this, Mike? Who approached who and when? I'm imagining you've been working on this behind the scenes for a while now.
Yeah, we have been working on this behind the scenes for a while. We approached Manawa some time ago, but we'd been thinking about it for quite a while before then, because we could see some of those portfolio benefits. They were very clear to us.
Tell me a bit more about that. What was the initial thought where you thought we should go in and acquire, we feel like we need to slam 2 balance sheets together?
Oh, look, there's a couple of things. Our hydro portfolio in particular is spring, summer weighted, and we've always made up for that with having thermal peaking. Well, obviously we want to phase that out, and then you have to turn your minds, well, how do we make up for that in the winter? And you've got Manawa's hydro generation, which is both geographically diverse, but also is weighted towards winter. And that's what makes you think, actually, this will help us get us to our future faster.
Where does this then rank you, if this goes ahead? We are going to talk about approval a little bit later on, but if this does go ahead, where would this rank you in terms of generation capacity? Because noting that Manawa now has no retail business, but in terms of size and scale for your generation megawatt power, how big of a powerhouse will you be?
So we'll have a total of about 10.5 terawatt hours as we are today, which puts us second in the market.
Behind Meridian.
Behind Meridian. And gives us about 24% of the market, which just should settle any anxiety about market dominance or anything like that.
Rob, there will be some people looking at this deal thinking that the last thing we need right now is less competition in the electricity industry. What would you say to people with those thoughts?
I think the first thing you've got to look at is what this actually produces, and putting 2 sets of diverse hydro assets together one, as Mike described, summer weighted and spring weighted versus a winter weighted. And what that does is actually allow us to, through our risk management strategies, actually sell more power into the forward market. And the importance of that is that means we can give more fixed contracts to major industrial users, which we do now, but sort of supercharges that, and also to independent retailers as well. So when we look at this, we actually think about it increasing competition in the longer term.
So more fixed price contracts at lower prices, that's what you're insinuating there?
Yes.
Mike, do you really expect the Commerce Commission to approve this, given what's happening in the sector right now?
We would not be sitting here today if we didn't have a high degree of confidence that the Commerce Commission, after doing their job, approves this. We believe that it will enhance the competitiveness of the market. The deeper portfolio that we have will enable more renewable generation to be built, which will only bring downward pressure on prices. And so we see this as a real positive for the market.
No shade on this deal at all, but often when there is consolidation between players of this size in any market, it can, for lack of a better term, sometimes look like a bit of desperation, like a survival tactic, because you need to put two balance sheets together to survive. Is that what this is? Because the industry's in hard times?
This is about opportunity. Manawa has a fantastic set of assets. They have a fantastic set of development options. They have a fantastic set of people. We believe that bringing the two together creates opportunity, both for us but also for the country.
Does it allow you to invest more in things like renewables, which you're already throwing billions of dollars at?
Absolutely. So the one thing that people are discovering the world over, that intermittents require firming, and firming is the secret sauce which is going to make the transition happen. And by bringing the hydro assets in behind the intermittent renewable development pipeline, you're able to build more renewable energy and thereby firm that electricity to provide a very secure supply to ordinary Kiwis.
You've said that this is going to increase resilience in the system. If you have more control over generation in more locations, can you just expand on how that actually works outside of firming? How does having more control over more generation mean that there will be less dips in the system?
So if you think of our, and Dorian talked to this in some detail, but if you think of our summer-weighted Clutha system, so we try and hold the water back as much as possible as we go into winter to make sure that we're not caught short in winter. But if you know, which can sometimes lead, if you suddenly get one of those May rainstorms, you end up spilling and energy is wasted. But if you know that your other hydro assets are going to be there for you in June, July, then you can produce the power more aggressively over April, May and be less conservative in holding the water back. And that overall, in and of itself, just leads to less spill and more efficient generation of energy.
So bottom line, you're telling me that if, say, this deal went ahead last year, for example, we wouldn't have had this year's energy industry situation?
I'm not saying that we wouldn't have had it. It maybe wouldn't have been as dramatic.
It's a very tidy deal, Rob. Whenever I cover these things, I mean, if you look at recent takeover offers that we've seen on the market, to bring one up, Stephen Tyndall's offer and bid for the Warehouse Group, that wasn't all tidied up and sort of neatly seamed up behind the scenes. This one is. In terms of going to Infratil, the majority owner of Manawa, who've owned this asset for, dare I say it, a year longer than I've been alive, how hard was it to get this deal all sewn up behind the scenes and then bring it to market with it almost fully approved?
Yeah, it's been a journey and over many months. It's fair to say, though, I think everyone had the same vision that both assets would come together and make a better set of hydro assets, and that's a really key and important thing. A big vote of confidence in Contact Energy by Infratil to say we're willing to be a shareholder, and with Dion Campbell coming on the board, it's something we welcome. He's got a long history in formerly Trustpower, but also obviously Manawa. And he brings a whole raft of experience in renewable energy of recent times as well. So we're certainly welcoming him as well.
What would you say to competitors, Mike, the likes of Meridian, the likes of Genesis, Mercury, looking at this? Should they be a bit scared about how big you're going to be now?
I wouldn't use the term scared. We're always up for competition. We enjoy competition. Competition is what keeps us lean. Competition is what drives down the cost of development opportunities. And so it's going to bring more competition. Bring it on.
2025, you think it's going to go ahead?
Absolutely confident it will go ahead, yes.
We'll talk again next year. Thank you both so much for your time. Appreciate
Thank
it.
you.
Thanks.
Good stuff.
Thanks for watching Markets with Madison. If you enjoyed this interview, please hit the like and subscribe buttons below. I do all of the research for these episodes myself, so your support means a lot. I always love to hear your feedback and ideas, so please drop any thoughts in the comments below. Now go put your money to work.